Hey everybody, I'm Joshua Phillips at Churchill Mortgage. It is Friday, August the 2nd, and I have some great news for you. Kind of what we've been waiting for and hoping for months now, but we are finally seeing some very positive news with mortgage interest rates. So let's go ahead and jump into these charts. If you watch this week to week, then you know that what we are looking at is a mortgage-backed security chart. That's where mortgage rates drive their values, and these are what's called Japanese candlesticks. Feel free to ask ChatGPT or Google it if you want to learn more about that. But the basics, all you really need to know to understand this picture is green is good, red is bad, and the higher the mortgage-backed security price, the better mortgage rates are doing. And this really tells the picture. If you followed this for the last few months, we've just kind of been this dull little up and down. Mortgage rates not changing much, but overall a little bit of a positive trend the last couple months. And now, as you can see, we've got this breakout here with these green candlesticks the last couple weeks as security prices have been improving, mortgage rates have been improving, and we have reached the best levels we've had. I'm going to actually pull this out here to a 1-year chart. I love these charts. We talked about how last year, mortgage rates hit their worst levels in October and then hit their best levels in January. So you can see here we hit our best levels back in January, right at the beginning of the year, and then we kind of drifted for the worst. We saw rates kind of get worse into the spring, and now we've kind of slowly, and then we've seen things jump back up, and we are now again at the best levels we've been at really in at least a year. We're matching those levels. Now, why is that happening? Well, I give a couple reasons. Number one, the Fed did meet on Wednesday, and in that meeting, they did not raise the Fed fund rate. By the way, Fed fund rate is not the same as mortgage rates, but they do relate. And they did not raise or change the Fed fund rate, but they continue to indicate that they're ready to raise it. And there seems to be a 100% chance that they're going to cut the Fed fund rate 0.25% in September, which is great news. And then today we got a jobs report here that was not good. I hate to say it, but if you're looking for better mortgage rates, we do want to see a jobs market that's not looking very good. And so we only had 114,000 new jobs. I think we were probably expecting 185,000. Saw the unemployment rate go up a little bit. And so that is bad news for the economy. More indication that the Fed's going to be cutting the Fed fund rate, and there's starting to be some expectation that maybe the Fed will even cut 0.5% in September. Now, here's the thing to keep in mind with this type of news. The market doesn't wait till this to happen in September before it actually does anything, okay? So the market is already baking in when we see this big positive move we've had. This is the Fed fund, this is the Fed cut already happening, basically. The markets don't wait for the news to kick in September. We are already getting the benefit of that news right now. So just keep that in mind. When we get to September, I believe it's September 18th, and you hear about the Fed cutting 1/4 or 1/2, yes, that's great news. But it's not like mortgage rates suddenly improved 1/4 or 0.5%. They are already improving right now. And so we are getting the benefit currently of that future event that we expect to happen. And that's just the way the market works. It doesn't wait for the news. It moves. So this is the move right here. Now this is very positive, and we've seen rates now, we've probably broken out from where we were a couple months ago. We're probably 0.5% better. So this is great news for everybody that's been waiting for lower interest rates. Now, it's not like rates are suddenly 4 or 5%. We may be, who knows, a couple years away from, hopefully rates coming back down significantly. But we should be seeing the best rates we've seen in at least a year. And where to go from here? Now, I think we're going to get some pullback. It's never a straight line. We'll probably see some pullback from these levels, and then maybe see things move further as economic information continues to come out. Sorry this video is long, but I want to touch on, so overall, great news. I want to touch on one other thing. If you are in the market to purchase a home later this year, I want to make sure that you're on top of the NAR settlement. This was a lawsuit against the National Association. Well, they involved the National Association of Realtors and several real estate companies. It's been talked about throughout the year. It is really coming into play in August. Now, I just pulled this up. You could Google it. This was one of the first articles that came up, and it's actually from the National Association of Realtors, and it has frequently asked questions. That might be a good place for you to start. But here's the bottom line. They're kind of separating out historically, if you're a buyer, your realtor is paid, your buyer's agent is paid by the seller of the home. That's the way it's typically always been done. But they are separating things out now, and they are saying that's, in other words, more negotiable. And there may be situations where the seller is not going to pay your real estate agent, and you may be responsible for paying your real estate agent 1, 2, 3% of the purchase price. We've already seen this happen with one of our clients here on my team at Churchill. And so you want to be aware of that. You need to be having a conversation with your buyer's agent, which we strongly recommend having a buyer's agent. You need to go ahead and be talking to them about what are the effects. How are things changing? Is there a possibility I may have to pay you? I know a lot of our clients, don't have an extreme amount of funds, and they're trying to make sure they have enough for the down payment and the closing costs. Well, if suddenly now you got to pay your buyer's agent, you may not have enough funds. So that's a conversation you need to be having first and foremost with your buyer's agent if you've not had that conversation already, and then potentially having that conversation with me if we're working together about what that means if potentially you've got to now come up with another 1, 2, or 3%, how that's going to affect things. So super important that you need to be on top of that. Sorry the video is so long. I try to keep them to no more than 3 or 4 minutes. This one's 7 minutes, but wanted to share that extra piece of information. Hey, hope you have a great weekend. Please keep in mind, if you need me, I'm here to help. If you want to get pre-approved, if you want to discuss interest rates, I'm here to discuss that with you. Again, Joshua Phillips, Churchill Mortgage. Have a great day. Bye-bye.